Well, European markets have improved over the course of the morning, but they did start out in the red on disappointing manufacturing data, both from London as well as China. The Deal Report's Jonathan Browdy is with us from London to tell us more.
Yeah, good morning, Joya. The weather here is slightly better than in New York, although we've got a lot of wind. Last month's losses continued on Monday, although many Asian exchanges were still closed for the Lunar New Year. Traders were still troubled by the uncertain outlook on emerging markets and signs of a further slowdown in China at the start of the Year of the Horse. China's official services and manufacturing indices, though still in growth territory, both declined further in January. Europe's markets were unmoved this morning by better manufacturing data. Britain slowed slightly, but January readings for the Market Purchasing Managers Index registered a 32-month high in Germany and even showed growth in Greek manufacturing for the first time since August 2009. Looking at individual stocks, Lloyds Banking Group, still one-third taxpayer-owned in Britain, led the London market down, falling more than 3% after setting aside yet another $2.9 billion to cover compensation for mis-selling payment protection insurance over the previous years. The bank's also delaying the start of dividend payments to shareholders until later this year. It was banned from paying dividends under the rules of the European Communities markets, stopping competition from when governments take over banks. But cans and containers maker Rexam announced an agreement to sell its healthcare devices and prescription retail divisions to Montague Private Equity for a transaction value of $805 million this morning. That deal pushed up Rexam's share price over 1.7%, and medical device group Smith Nephew was up 1.6% at 890.5 pence on the acquisition of Austin, Texas-based sports medicine and ear, nose and throat devices maker ArthroCare Corporation for $48.25 a share. That's about $1.7 billion.